Hi, this is Jeremy Tallman with T&H Realty Services. A common question we receive from investors new to the Central Indiana market is, what type of cash-on-cash return should I expect in Indianapolis? Now, as you probably know, cash-on-cash is simply a measurement of the net cash flow you receive before taxes divided by your total investment into that property. So, for example, let's say you purchase an $80,000 rental property and your total cash outlay to purchase that property is $16,000. Now, during that first year after receiving rents and paying all your expenses, including your debt service, you have a net cash flow before taxes of $1,500. So simply your cash-on-cash return in this case is the $1,500 divided by that $16,000 investment, or 9%. So generally, investors here in Indianapolis are shooting for somewhere between an 8 and 10% cash-on-cash return. Now, as I've noted in other videos I've done, that return, like the other returns that are measured, has went down significantly over the past several years because of the influx of investors into our market. So now, another thing to keep in mind is cash-on-cash can vary significantly from year to year. So again, for example, let's say in that second year of your investment, you have to replace the furnace. And let's say that furnace costs $2,500 to replace. So in almost every scenario, you're going to have a negative cash-on-cash return for that second year because of the big expenditure of that furnace. So again, I've said this before, never look at real estate or try to analyze on a 1, 2, or 3 year time frame. Real estate, as you should know, is a long-term play and really should be evaluated as such. If you have any questions about cash-on-cash return or investing in the Central Indiana market generally, please don't hesitate to contact me, and thanks for watching.